Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call today. Yeah, we'll be short and sweet. I mean, I think we had a pretty flat to lower market last week. So we saw the S&P 500, the Nasdaq fall about 2%. That Russell small cap area really lost the most. That was down about 4%, but we did see some bright spots with utilities, healthcare, kind of those underperforming sectors. Some points last year, some points this year really be the outperformers. Again, utilities and healthcare were the gainers. If we look at commodities, we saw crude oil prices pretty volatile, but they ended pretty unchanged. Gold futures rose about 2% to some new highs of about 2,973 per ounce. Now, if we look at bonds and currency, we saw the U.S. Treasury yields and the dollar both drift a bit lower. In terms of inflation and tariffs, the main drivers were some macro volatility. Now, the Fed held interest rates pretty steady. President Trump did announce some potential tariffs on automobiles, semiconductors, and pharmaceuticals, putting some volatility in some of those areas. It's been a wait and see when they'll go into effect, how big they'll be, how big they'll affect the market, so on and so forth. So the market's been kind of taking a little bit of the tariff talk of late in stride. Now, looking at economic data, we saw the U.S. PMI drop to about 50.4. Unemployment claims did rise a bit. We did see some mixed manufacturing data with the Empire State Index up and the Philly Fed Index moving down. Consumer sentiment and housing market both showed some declines. Internationally, the Eurozone data did show some positive, but inflation staying stubbornly high. UK CPI rose where the retail sales did increase. And over in Germany, we saw the economic sentiment improve. In Australia, we saw the unemployment rate increasing a bit. Now, this week, what are we looking at? A little bit of a light week in terms of some U.S. data. So we'll be looking at some core PCE price index and maybe some Fed commentary, some potential flattening of the yield curve. Generally, just some light week of economic data coming out. Maybe some headwinds here a little bit with some yields. So we'll be, what could be some factors of that? We'll be looking at the pre-tariff business, purchases, immigration policy, and the effect that might have on the labor market. Really wrapping up earnings. So we'll be looking at Salesforce coming out, maybe Home Depot, NVIDIA is going to be the big one, kind of setting the tone for that tech side of the market. Over in Europe, with Germany election will be over the weekend, and then we'll be looking at some inflation data coming out of the EU, Australia, and Japan. And again, some additional data coming out from Germany in terms of economic data. Jeremy?
Gotcha. Well, Graham, I had a question for you. So it just seems to be now the kind of earnings are over, and the market's just kind of churning or kind of rotating around. What are your thoughts on that?
Yeah, I think we might have mentioned it many times, either in person or over calls with clients, not to mention on the weekly wrap-ups or the lunch and learns that we host. Yeah, we kind of expect a great year last year. We're not going to be surprised to see additional volatility this year, especially coming into the first quarter. As we get late into the earnings, it's not surprising if companies really aren't blowing out those earnings. And those companies were the ones that really led the rally in 23, 24, that Mag 7, Magnificent 8, whatever taglines you want to put on those largest names, tech, AI, so on and so forth. If they're not knocking the ball out of the park, that could put some pressure. But the good thing is we are seeing some broadening out. We are seeing some additional volatility. We're expecting to possibly see a little bit more. And it's not to scare anyone. This is normal. It's never, ever comfortable. But I think we just have to embrace a bit more volatility coming into the first quarter, maybe into the summer, as we rally and then give it up. And the market tries to find a home, maybe in some areas that maybe underperformed.
Gotcha. Well, Graham, we always appreciate the information and expertise. And to our listeners, we do have our second set of retirement planning today classes coming up starting next Tuesday on March the 4th. So Tuesday's March 4th and 11th, and then Saturday's March 8th and 15th coming up. So if you want more information about that, give us a call at the office or go check out our website and you can get more information and sign up for that. And we'll see you next week.
Take care.